Welcome back, everyone. Hope you navigated today's Fed-fueled roller coaster without too many paper cuts.
Yeah, definitely some movement there.
For sure. The long-awaited rate decision sparked some notable chaos across the tape, SPY and QQQ nursing those downside shadows.
Those wicks.
Right, while DIA and IWM kind of flipped the script with top wick fades.
A lot of reversal action.
And we saw that massive breakout on QBTS, right? Blasted out of its weekly bull flag on monster volume.
Huge move on QBTS, yeah.
But then you have housing starts kind of flopping softer, and still two news-packed days looming tomorrow and Friday. So is this the pivot to rotation or just more headline ping pong?
That's the million-dollar question right now, isn't it?
Exactly. So you're tuned into the Stock Market Summary series. We're going to get into what we're seeing in the charts. But before we do, just a quick reminder, none of this is buying or selling advice.
Nope, just market commentary and trading education.
That's it. And hey, if you find these market summaries helpful, do us a solid and hit that like button. It's totally free, helps us out a big way.
Yeah, we'd appreciate that.
All right, let's dive into it. So today definitely delivered some significant volatility, especially after the Fed decision. It's sort of built on that modest pullback we mentioned last week.
Absolutely. And it's fascinating how the indices reacted. SPY, it edged down just 0.12%. But like you said, those big downside wicks are key. Shows sellers jumped in.
Right.
QQQ was similar, slipped 0.2%. But DIA, the Dow, that initially gained over 0.5%.
Yeah, it looks strong early.
But then sold off hard, leaving that large top wick. So early strength faded fast. And IWM, Russell 2000, climbed 0.26%, but still under that choppy pressure.
So really a day of wicks, like we said, felt like bulls probed higher early, but just couldn't hold it.
Exactly.
It really echoes that technically driven chop we flagged last week,
Yeah.
And that DIA breach we're watching. If it fails to reclaim support soon, well.
Could see deeper downside.
Yeah.
Definitely something to watch. But, amidst that broad indecision, some individual names really did stand out.
Oh, yeah, like QBTS you mentioned.
Yeah, D-Wave Quantum, QBTS, it really fired higher right out of a beautiful weekly chart bull flag formation. I mean, that's a classic pattern consolidation after a strong move. And Quantum Computing Inc., QUBT, is also kind of teasing a breakout. Similar weekly chart setup, bull flag or maybe a bull pullback. Its weekly chart is rolling higher after a gentle, coordinated pullback.
Interesting. So those quantum plays are definitely active.
They're grabbing attention for sure.
Which makes for a very mixed picture sector-wise. Financials, XLF, they led the rally, up almost 1%. Guess that's the rate cut tailwinds.
Seems likely, yeah. But then industrials, XLI, lagged hardest, dropping about 0.45%.
So what's the market really saying here? I mean, beyond just the daily chop.
Well, this mixed performance suggests the market's getting really selective. And if you connect this to the Fed, they held rates steady at 4.25% like everyone expected.
Right, no surprise there.
And the FOMC projections didn't show major shifts from the path we kind of anticipated after last week's retail sales beat. Chair Powell just emphasized again, cuts are data dependent.
Which brings us to that data. And the housing numbers weren't great. August data was pretty disappointing.
Yeah, building permits at 1.312 million. Missed consensus, missed the prior month.
And housing starts were even softer, 1.307 million. That's way below forecast and a sharp drop from July.
Right. So this softer print, especially after we saw some signs of consumer strength, it sort of tempers that resilience vibe, It keeps things technically driven, especially with more news coming. And it adds to that data dependency puzzle for the Fed. Makes the path forward for rates less clear.
So managing risk becomes even more crucial on days like this.
Absolutely. Understanding how to read these conflicting signals, manage volatility. Cass, it's exactly the kind of practical skill we focus on in the Grok Trade Mentorship program, adapting to conditions like these.
Makes sense. Now, while equities were wrestling with all this, what about other assets? Bitcoin.
Bitcoin stumbled a bit today, down 0.86%. But importantly, it's still holding above its 50-day moving average. So maybe it's just consolidating, building energy after last week's bounce.
Okay. Ethereum.
Ethereum was kind of just in the mix. No major fireworks there today.
And metals.
Metals pulled back. Gold, GLD, actually wicked to a new high intraday before selling off 0.77%.
Oh, it's interesting. So another wick story there.
Yeah. And silver, SLV, got hit harder, down 0.81% on pretty big volume. Just extends those mixed signals we've been eyeing since last week's patterns emerged.
Seems like a shift away from safe havens, maybe temporarily.
Could be. The pullback, despite the uncertainty, is notable.
Okay. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Yeah, let us know what you're seeing.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe too, so you don't miss a beat. You can always unsubscribe later if you want.
Right. And, days like today's wick-heavy chaos, seeing QBTS explode from that weekly bull flag, or QBT teasing that coordinated pullback breakout, it really illustrates why having a structured approach, like we teach, delivers an edge.
Being able to spot those setups.
Exactly. Spotting high probability setups, mastering risk, especially amid all this Fed volatility, and just trading with more confidence. That's what the Grok Trade Mentorship program is about, hands-on coaching, and we even guarantee support until you recoup your investment. We really stand behind it.
Okay, so wrapping up, today's steady Fed hand mixed with that housing miss definitely fueled indecision across the indices.
Yeah, lots of chop.
So the big question now, what's your read? Does this chop set up a relief rally, or are we looking at more probing lower?
Be interesting to see how it resolves.
Let us know what you think in the comments. All right, everyone, have a great rest of your day, and we'll catch you in tomorrow's market summary.